Sherlock, hi, Bulldogs. All right, good morning, everybody. Ed Parcaut with Mike Kelly.
The same
The
guy
shorter
again. The
version.
shorter version. I'll
Of
fix
Mike
that.
Kelly.
Oh,
Wrong way.
There it goes.
Yeah, he's going downstairs. Get down there. Can you
Getting in
pick
the
up the
basement.
stuff in the basement for me?
Yep, I got the towels.
Yeah, nobody would know that joke, just like they don't know Dave's not here.
Yeah, he's not here.
No, this is Dave.
This is Dave.
No, dude, Dave's not here. All right, what do we have today? What did I say we had? Oh, we had initial jobless claims.
Yeah, these are the people just going off.
Well, yeah, just going off what?
Jobs.
Yeah, I'm just looking to see where the market's not up there yet right now. I guess I got to talk over here. The BLS report. BLS? No, initial jobless claims. That's not BLS yet.
Well, you're the one that wrote it.
I know, but sometimes someone helps me rewrite it, and they didn't do a good job. All right, so initial jobless claims fell by 5,000 to 229,000. Still a pretty low number by historical standards. Continuing claims dropped by 7,000, but remained elevated at 1.9 million, one of the highest levels since 2021.
Wow.
The real story, even though firings remain low, the data suggests that once people lose their job, it is much harder to find a new one. Shocking, what we've been saying forever. Over the past 3 months, continuing claims has hovered around 1.95 million, signaling persistent job search struggles. Since January 2024, the number of people receiving continuing claims has risen by 200,000, but total unemployment has jumped by 1.1 million. Did you get that?
Yeah.
But that's
a lot of numbers.
That's a 900,000 gap, likely made up of people whose benefits expire after 26 weeks. Told you I'd find out that number. The limit is in most states who haven't found work. They get kicked off no matter after 26 weeks. There is no Fed, during the pandemic stuff where you can stay on there
forever.
Yeah. Just keep going back. You sure you're looking for work? Yeah, in between my games on Xbox.
I come out of the basement. Yeah. It's still dark.
Also, keep in mind, many gig workers do not qualify for benefits, making an initial claims number appear better than it actually is. So you're talking self-employed people can't, even though during I thought for sure because of COVID and they were paying, self-employed people unemployment benefits, that would set it up to have to pay them down the road, but I guess not.
Yeah, that's a good thing, I think.
A good thing. That's a bad thing.
Well, no, if you're self-employed or you're not employed.
Well, self-employed means you're trying to build a business and then it fails and you're screwed.
Well, should we bail out every business that fails?
Not the business. How about just the guy that was working there?
Well, I'd love to be able to do with that for everybody.
I mean, they did that for real estate agents during the pandemic.
Yeah, I don't think I partook.
Well, a lot of them went and got the other money too.
Yeah.
Let's see where we at. I was trying to see where we're at. The thing's stuck at Nivea over there.
How's it doing?
It's down $1.85.
Buy.
We're looking at right now. The mortgages are just about, they're down 2 basis points. Not a big deal. I mean, up 2 basis points with the rate, right?
Yeah.
10 years sitting at 4.21. It's still at a good number. Everything's slowly going down, and that's what we want. We want steady. Steady is better than fast, and because we don't want that up and down throughout the day. It just makes me crazy.
Yeah.
Tomorrow is
Friday.
Yeah, right. But it's also PCE. So the question is going to be, what's that coming in at? And we don't know until it happens. Yep. But they're expecting the current headline number to be 2.6% and core to be year over year at 2.8. So if it comes anything worse than that or better than that, we'll see what happens with the bond market.
Now, interest rates have calmed down a little bit, right?
Yeah, they're in the mid 6s for a conventional.
And do you think that's in anticipation of a 0.25% cut for the overnight rate?
Yes, just like last time.
So the people who are sitting on the fence waiting for the 0.25% or quarter drop in the overnight rate should get off the fence, because we've already adjusted the interest rates in anticipation of that.
Especially if it's a 6-foot high fence.
Yeah.
Because they can fall and hurt themselves.
Yeah, you won't even hurt your ankles unless you weigh like
yes, you should not be waiting for what the Fed is going to do. Bond market, which is the rates, always takes an effect ahead of time what is going to be put out there and what is being done already. They think is going to be done. And when it happens, nothing happens to rates. But when it doesn't happen, like last time when they did it, it wasn't that they did it was the problem. It was the fact that the employment market was worse. The BLS jobs
Right.
report came out and said how amazing it was. There were so many jobs created. It was the best ever.
That was last September, wasn't it?
Yeah, it was.
Yeah.
And that's how rates, and then all of a sudden rates went through the roof and we're back to 8.25.
Yeah. Now remember, last September, who was president?
And that was the president before Trump, 46.
Yeah, exactly.
Biden.
So it wasn't Trump's fault.
No, it wasn't. It was BLS job. It was a BLS numbers report. So that's why they're really focusing on. And I know everybody was like, "Will they fire the late?" Well, in order to change the area, you normally have to fire the people over there and put new people in.
So they don't,
because if they didn't take it upon,
they did it
right, if they didn't take it upon themselves to make that change to begin with and make it better, why would they do it going
or more
forward?
accurate?
Yeah, that's what I mean.
Yeah.
More accurate when better was what I was trying to say.
Yeah, I knew what you were trying to say.
Because it was so far off, it's ridiculous.
It was
you can't
crazy.
You can't plan. They can't plan what the Fed should do and what they shouldn't do if it's so far off and they need it fixed. So hopefully they'll get that fixed.
Yeah. So what else do you have to report on?
Oh, you have something to talk about?
Well, I was just thinking of
pending
something.
home sales in July saw a 0.4 decline, worse than expected, 1% dip. However, year-over-year sales turned positive, rising 0.7 compared to negative 2.8% last month.
Yeah.
One last thing. All right.
July was weird.
Yeah, very weird. But this U.S. land market cool down. This is why I'm not listing my property right now. Only 28% of brokers say demand is strong, down from 76% a year ago. Prices are holding, especially in A and B locations. That would be before C and D locations. Those are the type of land and everything.
Right.
Builders are cautious. Sellers remain firm. It's a stalemate market. Sellers don't want to drop their prices. Builders don't want to buy the lots.
They don't want to pay their prices.
Yeah, exactly.
Yeah.
But the build to rent trend, these operators now make up 8% of finished lots. They are the people who buy it, build it, and then rent it.
Gotcha.
That's still up 5% from last year. That is still growing.
We don't need a lot of rent. I mean, we need rentals, but we also need, single family homes or condos for owner occupied.
Well, they're just the big push right now is to stop these corporations from being able to own so much real estate, because
you mean like BlackRock and stuff?
Whoever it is, I'm not going to pick anybody out.
Okay.
Because it is affecting overall people. They're competing with everybody else who's trying to buy. Older people are trying to scale down, and new people trying to move in to this lower stuff. Anyway.
Prop 19 should be helping.
What is Prop 19?
Prop 19 is where if you're 55 or older, you can sell your property and move into any county in state of California and take a small stepped up basis of your existing property taxes.
Right. So whatever your
property.
Right. So whatever your property taxes are now, you write that down. Whatever you sell your house for, and then whatever you buy the next house for, the difference of that is added to your basis.
Right.
That way.
Not the whole thing.
No, but here's the thing. I'm at 300 or I'm at 400, and then I buy a 400,000. You know what I mean? If my base is at 400, I go to the next one. It just transfers. That's what I wish it would go down, but it's not gonna.
Yeah. And props. I'm trying to remember the numbers.
Prop 13 is the original
Prop
one.
13 is just your
taxes only go up 3% a year.
Yeah. So Prop 60 and Prop 90. Prop 60 would allow you to do it within the county, but you had to buy down. You couldn't buy up. Or you had to buy up. You couldn't buy down. This one, Prop 19, you could buy up or down. And Prop 90 would let you, there were 11 original counties that participated, but now all 50, I want to say 52 or 53 counties participate. And you can do it up to 3 times.
Right. That's the other. Yeah, that's a new one.
Yeah.
The one I liked before, I liked it before because if you move from here to Tuolumne County, they just took your tax rate base from here and moved it up there.
Right.
And
just straight across.
Straight across. There was only a few, like you said, a few counties who did that.
Right.
And that was good. I like that.
We had to put in like I did it, but there was the small step up basis is how we got the Teachers Association and the firefighters and police to move along with that Prop 19. Before, with no step up, they're like, well, that's how we get paid is through county taxes. So
Yeah, but
We
so let's get people to have to pay taxes they can't afford when we
exactly,
retire.
exactly.
What they should do is that once you hit 65, you don't have to pay property taxes
That would
anymore.
be
That's
wonderful.
what they should do.
Yeah.
That would keep. That's what they do in Europe, and that's what we should do here.
Well, and I believe DeSantis is talking about no property taxes.
That's would
Period.
be that'd be in Florida.
Yeah.
But in Florida, if I'm a veteran, I think 100% disabled, I don't have property taxes either. And some states are 70 to 100% are you have no taxes also because that in California it's all messed up.
Yeah.
And they were trying to pass it, and then they tabled it in California. That's how much they don't care about people. They just care about the dollars.
Well, you got a dictator as a governor.
It wasn't even them. It was a group of other people who moved
Yeah.
the thing. A couple more things. CFPB. That is the what is that? The Financial Bureau of whatever. That they oversee us, the NMLS people, and banks and on banks. So they're saying they've been gutted by the Trump administration. The new proposal refines that would count as a risk to the consumer. It focuses on serious misconduct, dropping minor infractions, could reduce regulatory burdens for 154,000 plus non-banks and significantly lower compliance costs. Comes after a ruling about 90% of workforce reduction under the Trump administration. The CFPB, we already have DRE, and in California, so that would and you have the CBO right in California to oversee. So do we really need the CFPB? I don't think so.
Yeah,
but that's just me. Then I've been hearing that there's so many arms being done out there. And I'm not talking like lifting weights. Yeah, I'm talking about arm, like a refinance, like a purchase versus a fixed rate. There's a myth out there that's 41% of all loans out there are ARMs. That's adjustable rate mortgages for people who don't know what an ARM is.
Yeah.
But that is not true. Fed data shows over 90% are fixed rate loans out there. So only 10% would be ARMs.
Well, that math works.
Yeah. About they're saying only about 8.4% of all applications. Current ARM rate is 6.919, which is lower than the 6.625 for fixed rates. But the problem is it's an ARM.
The volatility of the ARM adjusting. That's not enough gap to make it worth your while.
And sometimes in the past, it used to be like, there was the 5 1s and 10 1s, 7 1s, and you were moving. And most people aren't moving when they get to lower rates. They're just not moving around. So no. Is there anything else I had on here? Oh, somebody was saying refinancing in 2025 is not always worth it. Borrowers need a minimum of a 0.75 rate drop to break even in less than 3 years. How much are you charging?
Yeah.
Well, let me tell you, scenario modeling an average 386,000 at 6.8% with a $5,458 in closing costs. My question is that closing costs or is that prepaid items? So here's if you talk to people online, they talk, if they're smart, they talk closing costs, just the closing costs.
Right.
And they don't talk about the impounds and everything else because those are not costs. They're just transferred over.
Right.
Well, if you're paying $5,458 for a 6.8% 386, give me a call.
Yeah, you're paying too much.
Exactly, because they're saying a quarter drop is 24 after 3 years. A 0.5% drop is break even at 3.8 years. 1% drop break even in 20 months at 4,764. Here's the deal. I do a lot of VA arms, VA EARLs. And we have, there's a whole factor. You got to make sure that it does this, and this, and this, or they can't do it at all. They're protected. Well, I look at it. What's the lowest you can go with no cost for the rate, no title fees, and no underwriting fees, and let's see how much you save there. Well, I have somebody who's saving $270. Well, if I charge them more money to lower it, well, it's only what's the difference between that rate where they're at and the lower rate. And how many years will it take you to pay that difference back?
Right.
Where a lot of places they'll go lower and then figure the whole thing out in the whole number. And I'm like, that's that, but I could get to here with no cost. What's the difference from here? No cost to the cost. That's the difference in the savings. Well, you're saving additional $50, but then with the cost added in, you're only saving an additional $35, but it's costing me $7,000. Why would I
out
do
of my
that
pocket right now?
Why would I do that? That makes no sense. Do the minimal cost refinance. Don't do the full cost because their rates are going to continue to go down. You're going to do it again.
Yeah.
don't. Yeah, and so I don't. This 54. I'm like, move on, go to somewhere else.
Yeah. The only thing I was thinking about this morning is that it as far as what you got?
Yeah, that's all I had. And with the refinances we transfer the impound account, so it's not even. So they reduce it to your payoff. So it's not even like you're adding it on again. All right, move on.
I've got a couple transactions where, everybody has a TC, a transaction coordinator that helps with their deals, their side of the deal.
Not everybody.
Well, most people. Let's put it that way.
Most should.
These two do have TCs, and
these two what?
Agents.
Okay.
One we closed yesterday. One will close near the end of this month. TCs, stay in your lane. Don't start demanding documents that have nothing to do with the contract. Read the contract. Don't ask me to change things. The contract is the contract. I'm not going to add the stuff that, well, my broker always wants this. Well, then,
like what?
Well, like a market conditions advisory or just stupid extemporaneous stuff. If your broker demands it, write it into the contract. I'll provide it. If it's just some kicks and giggles stuff that, I need this and this and this.
Like what?
Like the market conditions.
What else?
Or
what were they asking for?
Just stupid stuff.
I know, but I was just, people like to know examples.
We need to know. We need to have you sign the portion where it says you're going to accept. The only way you'll accept your correspondence is via email. Okay, that's not exactly what it's called, but it's an option. It's an option. You choose not to do it, you don't do it. You email anyway. You don't need to have. In fact, I was up in arms when they put that into the contract. I'm like, why do we need this? Some attorney somewhere said you probably should have this. Does it change the transaction by not having it signed by you? No, it doesn't. Stay in your lane. Stay in your lane. That's all I got to say.
Well, here's the deal. Like back in the day when I was helping out doing tons of negotiating short sales, there was a company in town, big company in town. They didn't care if they got the stuff back to you signed.
Yeah.
They don't care.
Right.
And as long as you send it to them and a proof you sent it to them, that's all you need.
Yeah. Well, and that's what we do. We say, document your file. You sent it to us. We've received it. Thank you.
I know, but I mean, like, sign certain things are supposed to come back, certain
and 9 times out of 10, just to be nice, I'll do it. But sometimes when you're pushy, I push back.
Yeah. Well, yeah, that's how things are.
Yeah.
All right. That's all we have for today.
Tomorrow's going to be a wonderful
I was
Friday.
thinking today was Friday for a second there.
Well, our speaker this morning at Rotary thought it was Tuesday. She says it's so wonderful to see so many happy people Tuesday morning, so early on Tuesday morning. Well,
really?
Yes, because we're happy because it's actually Thursday.
And we only have one more day of work.
Yeah. Friday, Junior.
Labor Day weekend.
Yeah. Okay, so are we going to be here Monday?
No. Okay. Monday's a holiday. We are not on Mondays. We're not here on holidays.
Yep.
Excuse me for that yawn. That's what happens when you wake up at. So my wife got home about 12 after this ED. And,
sorry to hear about her.
And then she didn't wake me up. And then I woke up at like 3. I'm like, we're going to sleep in. 3:15.
Yeah, you have 45 minutes, right? Cool.
No, I didn't care what time I got there. I was doing legs.
Oh,
yeah.
Legs.
Plus, I wasn't going to Rotary.
Yeah, I know.
It's funny how many people I see in the gym that's like, hey, you keep missing leg day.
Never miss leg day.
Yeah, these guys, it's like, you got some great upper body, but man, you got some lucky legs.
Sorry, I didn't.
You know what lucky legs are?
Lucky legs?
Yeah, lucky they don't break.
Oh. I thought those were chicken legs.
Like
same thing.
Guy from Australia I knew, he was like, dude, that dude's got lucky legs. I'm like, what the heck's lucky legs? He goes, lucky they don't break. All right, make it a great day. We'll talk tomorrow.
Have fun, my friends.
All right, bye.
Bye.